Hey traders, welcome to Charts and Coffee. Great to see everybody. Hope everyone's doing well. Let me get this camera tilted up just a bit. There we go. Great to see everyone. Hope everyone had a really good, happy weekend. And I know it's cold in most parts of the world, although I heard certain parts of Florida, I think the middle of Florida, Lakeland maybe, was colder than Anchorage, Alaska this morning. So yowza. I live in South Florida for a reason. I like it warm. I like it humid. So it's anyways, hope everyone's staying warm. Kind of a cold morning in the market. That is for sure. You know, we're still wandering ever closer to the Wednesday Fed meeting, not looking for a rate hike. However, we are going to be looking for the messaging that maps to the eventual March, maybe May, maybe June, but it's looking like March rate hike. So that's what we've got going on. I mean, yes, this is a very busy calendar this week, very busy. So it's not like we're lacking it's not as if we don't have enough to be keeping an eye on. We have GDP this week, of course, the FOMC, but nothing is going to obviously overshadow that Wednesday 2 p.m. hot zone. And what a hot zone it will be. After that, we've got the GDP hot zone. We still have earnings. Again, another kind of scheduled, high impact, high volatility economic release. Got to be aware of all of those. So as always, this show is about your questions. So let's get to them. All right. So first up, let's get to our charts here. Where the heck are my charts? There we go. So first up is Peter. All right. Question is, where do I anchor my VWAP trio indicator in TradingView? So it's the same way that I would anchor it on any of the platforms, Peter. So if it's intraday, it's based on time. I'm usually looking at 2 a.m., 7 a.m., 9:30. And if it's end of day, the daily time frame, it's a little bit different. We have different anchors we can look at. So consider just some basics. First the year, first the month. If you're looking at an IPO, that born on date. Some folks like to anchor to earnings. So there's some flexibility there. There's no rigid what's right and what's wrong. It's just really a matter of how is it that you want to measure volume from a particular point in time or date forward. That's the whole game when it comes to VWAPs. All right. So I hope that was helpful. All right. Next up, Hutch. Oh my gosh. These markets are like the last 2 minutes of the Chiefs and Bills game, up, down, back and forth. I don't know that I've seen a crazier, what was it, about the last 2 minutes and 35 seconds? We were at 21-26 and we ended up 36-40. Unbelievable. I have to say, I was rooting for the underdog Bills. Mahomes is a magician. I think Allen played unbelievably. Crazy games this week. Yeah, back and forth. I completely agree. It was a heck of a game. You know, I'll tell you what, we all have our favorites when we're going into a game. We're rooting for a particular team, but above a team, unless it's the Patriots. And even then, I'm a fan of the game. I want the best team to win. And, with Bucks Rams, it was the Rams. They just played a better 4 quarters. And, that one, the overtime rules for NFL have got to change. That was that very a coin toss, really deciding the game, if you will, at that point. Anyways, I always remember this. I had a trader friend tell me, look, he says he wasn't a sports fan at all. He says, no one's sending me a check if my favorite sports team wins. My life isn't any different if my favorite sport team wins or loses. He goes, I don't watch that stuff. I'm like, fair enough. I lose my mind a little bit. I've got to work on that though. All right, Pfizer. Hey there, Jose. So Pfizer and healthcare. Pfizer's going to go, for the most part, where healthcare goes, XLV. Remember, index sector stock. That is the ETF approach to the markets that I focus on. That's the sector secrets mantra, if you will. Sector is in the middle. It's really the building block in many ways of the index, of the indices. And it's also going to dictate a lot of what individual stocks do. So we want to start with that broader index sector stock. So if I'm looking at Pfizer, it's a relative outperformer. And if we're going to see any reprieve on XLV, those of you in the mastery know, and I've taught a lot of you, if we're in chop, and are we in chop? Take a look at our JT multi, right? The history has been kind of going back and forth between mostly bullish. We're at really still at testing that 200 propulsion. This is an interesting place for that minor low pattern. I taught you all that minor low pattern in a previous free video. It's a classic pattern. And that lower low surrounded by two higher lows. We don't just look for the pattern. We look for the pattern to occur at a certain spot. Just like we don't look for indicators, but we look for indicators to coincide with other factors. This is a fantastic combination in XLV, which is in many ways going to dictate, Jose, what we could see next in Pfizer. So let me show you how we put this together really quick. Darvis, this is the best way to automate support and resistance, bar none. 1950s, 1960s, this process was created. At this point, what we have in my Darvis 2.0 is just a modernization of that. It's not really Darvis anymore. We just modernized it based on these minor low and minor high patterns, which just makes it much more realistic for the kind of markets we deal with now. So there's your automated support and resistance, which, by the way, Darvis 2.0 is absolutely free. There's your propulsion. So right in that same area, look what's swooping in there, the 200 propulsion. You connect the dots on these, that's where the 200 EMA is. So two reasons, that's a nice stacked level. Have multiple Ys, sort of the Simon Sinek school of technical analysis. Have more than one Y at a level. All right, well then why is this even potentially an exhaustion level? We don't know if it ultimately will be, but we have a yellow neutral JT multi. Neutral in the color means a non-trending market, but we look at the previous trend to say, well, what's the likelihood of continuing higher or lower? Now we also know that this doesn't have to bounce. It could just pull a good old-fashioned hot knife through butter and take out that 200 propulsion. We've seen that in other places. So we can look at whether or not this chop is in fact oversold, kind of at or below the 20 level of the slow stow. Here are all the settings, okay, right there to recreate this. And then this is built into your TOS platform, by the way, including the signals, everything. That's just free in TOS. Just what's unique is where I'll tell you to put the settings, okay? All right, so we are in an oversold zone. So that's potentially, right? That's potentially support. Fantastic. So where is this happening? How is it being confirmed? And then the last thing I'll tell you is check out that video back at the Simpler Trading YouTube channel for the minor low pattern. Wait for that. I think that'll make a lot of sense. And then Jose, watch how Pfizer then responds to the tide, if you will, right? My boats and tide analogy, the tide rising, affecting a pretty sizable boat within the XLV. All right, so next up, thanks for the question. All right, next up, we've got Line Watcher asks, when is this bloodbath going to stop? Line Watcher, my guess is as good as anyone else's guess. I'm going to say that what we have to do, so remember this, when we have an overall, and at Line Watcher, I'm sure a lot of people share your sentiment, no doubt. So think of it this way. In CHOP, which at the broader index level, believe it or not, we are still in. Now, I believe that if you look at the ES, and this is through visual, this is not my feelings or my gut. What I believe by interpreting what's in front of me still, we're testing that 200, but we're also testing that 200 with the Federal Reserve basically less than 72 hours away. So we know that could be a significant catalyst because of the impact of that hot zone at FOMC day. We know that could be a catalyst for an oversold bounce. Let's take a look at what's happened Last time we were in this area, this is where the automation of support and resistance. This is why I encourage everyone to have this. This is one of the 4 TOPS tools. Some of you might remember TOPS. This is a class I did way back in 2017. This is the foundation for everything. TOPS is the wave, the grab, the Darvis 2.0, and propulsion. This is the foundation for everything that I do. And then we kind of, in a hierarchy, we layer on volume tools. We layer on time and volatility, right? So get the foundation on the chart. By the way, this will work with everything that you have. If you've purchased a premium indicator from Simpler, this will not, other than 10X, because 10X is also a color-coded candle approach. But other than that, it works with everything. And if you're a momentum trader, I would recommend 10X, of course. But if you're looking at the underlying market structure, that's where the grab candles come in. So it's not an either or. It's what do I need to understand about the market. So then once you've got the foundation of TOPS, which is available over at the Countdown Trader, countdowntrader.com, get that layout. In fact, if you're in the options room, futures room, or my Sector Secrets Mastery, I'm going to share the layout. So you have these basic tools on your chart with the settings that I've shared. Everything from MACD to a CCI to a slow stochastic. So you can reproduce it much easier. That being said, we have some zones that could hold. Considering the week that's coming, it's probably not a bad idea to wait over sold stochastic, neutral, underlying trend of the market. Fantastic support. It is troubling. We're south of the 200, but we can wait for a minor low all the same. The one index that's probably bearish, and it makes sense why it would be bearish. We know what's happening with the 10-year yield, right? We know how sensitive tech is. And I think in an upcoming notes, I'll explain my reasoning. Look, everyone's got their reasoning. I'll explain my reasoning for why I think yields and tech move the way they do, and you can take from it what you will. We'll probably do that later this week. But what I do know, in that color-coded simplicity, what do we have? Red over red. So this is distinctly different. That reading of the underlying trend. What does red over red mean? Upper row, momentum. Lower row, trend. This is bearish over bearish. Red over red. Take a look at the Dow. Red over yellow. Bearish momentum, no doubt. Yellow neutral market trend. That's exactly what we see on the ES. In CHOP, we've got to get very specific about the indices, about the sectors, about the stocks. In fact, one of the kind of the jargon that I want to take out of my, and I think we all do it, is talk about the markets, right? There's no such thing as the markets, right? We want to remember indices can move independently from one another. Sectors can move independently from one another. In a rising tide, that overall the market approach, that's fine. But in CHOP, in downtrends, we've got to get specific. And when we get specific, we will empower ourselves to make, I think, more clear decisions about where there's strength, where there's weakness, and where we can take advantage of really clear market structure, right? At the end of the day, market structure is everything. Charles Dow taught us this 140 years ago, right? With the 4 market behaviors, the 4 market trends. So when I talk about structure, I'm talking about Dow theory, right? We all stand atop the shoulder of giants. Just some folks just forget that, hey, this is where it came from. Why not study the source? I'm a big fan of that. So that is how I'm looking at it. Is it time to buy the dollar, David? So here's the way I'm going to look at the dollar. Anytime we talk about the dollar, my movement forward, David, and terrific question. My movement forward is going to be, let's short the euro. Why? Because the dollar DX, the dollar UUP is a basket. It's a basket of currencies traded against the dollar. So it's primarily euro, yen, pound, and then even less fairy dusting of Canadian dollar and franc and krona. So if I know that 58%, nearly 58% of the dollar index is euro, this is the primary relationship. Dollar heads higher, euro heads lower. It's the strongest, most consistent negative or inverse correlation there is in any market. With that being said, what I want to do is focus on overbought shorts in this neutral environment. So let's start with the structure, right? JT multi. We know we're neutral mostly for the right now. You can see the neutral. This is the trend. And we're actually getting just neutral here. And before that, it was a little bit bullish in the momentum. So the lower row is what I'm looking at for the trend. The upper one's going to change a little bit more because it's momentum. Momentum can be neutral, bullish, bearish, and still not necessarily affect the trend. That's why we separate them out. I think those 4 moving averages are extremely powerful. They're the most popular here within the simpler trading community. The only difference is I don't want them fully stacked. I want to separate the 8, 13, 21 from the 34, which is why you see our trade flags and or JT multi history separating those out. Okay, now that you know what you're looking at there, we know the structure a la Charles Dow. Now we want to ask ourselves, all right, if this is mostly bearish, thank you, red trend preceding the neutral yellow trend, what do we want to do? Well, we could do a couple things. We can focus on, as long as this is yellow, we can focus on right here. Take a look at your overbought resistance plus 80. Now, I've talked a little bit about 80 and 75 and 70 and the different ways that you can move the overbought and the oversold levels. I will recommend not to do that because what happens is a lot of new traders, they tend to move to a more aggressive 70, which if you're conscious of why you're doing that, it's no problem. Or they'll move the lower to a more aggressive 30. What they're doing unknowingly is they're getting up into the overbought territory quicker, but they're actually delaying the signal on the way back down, right? So what happens is it's a little aggressive. So unless you know it's aggressive, right? Unless you're aware of that setting, you're not going to know why an indicator is doing what it's doing, which is why I love to share any indicator that I create or teach with full transparency. Otherwise, you don't know why the secret squiggle is doing what it's doing, right? Okay, so then here we are getting back down through 80. That's where those signals kick in. That's a K and a D on the slow stochastic. But that only matters because we're neutral. That only matters if we're at a resistance level. So what I would say to do is look at previous highs. I'd say near the 115 handle on 6E is where I'd short or long puts the 6E. That's also where FXE long puts will work. So David, that's the way I'm trading the dollar, not through the basket, but specifically through the euro. Awesome question. Thank you. How many red days do we need to validate a downtrend? Awesome question. So what will oftentimes be a precursor to the more conservative JT multi or the JT trend trade flag reading of red over red? Let me show you what the NASDAQ looks like. Right, you'll see NASDAQ's red over red. Red momentum, red trend. Bearish momentum, bearish trend. You can see that right on the trade flag. And then that mimics what's happening on the hard ride edge, that very edge of the indicator, of the JT multi indicator showing the history. Okay, if we get 5 to 8, I prefer even 8 to 10, red grab candles in a row, we're likely looking at an aggressive definition of a downtrend. Very fresh, very new downtrend. The JT multi, because it's waiting for the 8, 13, 21, and 34 to also align bearishly, it's going to lag. Moving averages are lagging. That's both good and bad, right? It's good if we understand its nature relating to price. It's bad if we're still deluded by this notion of leading indicators. I can't believe that anybody still talks about leading indicators because that's just ridiculous. Can an indicator that needs price lead price? Logic tells us it can't, right? So if I have a price-based understanding of bearish structure using the grab candles, and then I use different moving averages, propulsion dots are moving averages. The JT multi, those are moving averages. That's why I mean the transparency of the indicator is so important for me to convey, right? So the idea here is minimum 5. I prefer 8 to 10 red grab candles in a row, precursor. And then I want on the JT multi, I like about 2 sessions. 2 sessions. It doesn't matter if it's yellow over yellow, neutral over neutral, bullish over bullish, or bearish over bearish. I like to see 2 sessions minimally. So awesome question. Yeah, 2 sessions on that JT multi. And JT multi is going to help everybody. This is not specific to my approach. It's a foundation within TOPS. Yes. TOPS, by the way, is just my indicator package that we've made available for free that everybody has access to at countdowntrader.com. We look at grab candles, the wave, which is those 3 moving averages, the red, blue, and green. It's the automated support and resistance of the Darvas 2.0. By the way, some of you have 3.0 that adds some signals and some unique features, but start with the 2.0. It's fantastic. And then also the propulsion dots, which simultaneously allows you to take advantage of the age-old moving average cross, as well as sort of a smart moving average. In other words, it turns on and off, which is really neat. Once you get used to the visual of TOPS, you can overlay any indicator you'd like. And I believe that even if you like, look, if you're using some, because people always ask me about 10X and grab, this is not an either or, gang. This is not an either or at all. What this is you can use the labels of 10X, right? You know that we have the multi-10. So you can use the labels of 10X with the grab. You don't have to color code the candles. So for me, if I want to know what 10X is doing, I could just flick the labels on. And I bring that up because that's probably the most popular question I get when it comes to grab. So grab the free tools, lay them out on the chart, and then anything else you do is only going to be more accurate when you understand the underlying market environment. That's what JT Multi does better than anything else. Very easily, you can understand the difference between momentum and trend. It's unique. There's just nothing else that does it. And I'll tell you what, so many of these tools are things that are really just reflective of these classic Dow theory principles. I love that. I love sharing something with you all that's been time tested for over a century. So good stuff. Thank you for the question on that one. Love that. How do we understand the environment? PEP, Jamie? PEP's on the list. I like PEP, but more so, let's think index sector stock. XLP, I like a lot. Crack open XLP, Jamie. You will see there's a lot to like because defensives tend to be a place where people like to hide out. There's a lot to like in PEP. There's a lot to like in that XLP. That is some fertile ground. It's a good place to take cover when there's risk aversion elsewhere. Now, everything, including XLP and XLU, is going to be subjected to the FOMC volatility of that hot zone, that red hot zone. However, PEP is absolutely something that I've got on my radar. Terrific question. So in terms of activity, Jim, I'll probably sort of take cover, if you will, and keep things really short-term day trading until we get to Wednesday. And then I want to use Wednesday's volatility to set up my next round of trades, to set up our next round of trades. So I don't know if it's going to be quiet because remember, if we know there's a scheduled high impact volatility event, that's what a hot zone is, right? I coined hot zone in my last third book. Someone asked me, how do you look at events, economic events? I said, well, I look at them. Do we know they're coming? Because unscheduled, you can't prepare for. The second part is, if it's on the calendar, do we know it's going to be high impact? So then I realized these are not just any kind of economic release. Earnings are that. FOMC is that. Non-farm payroll is that. Initial claims for a time was a pretty impactful hot zone. Any central bank, for that matter. Crude oil inventories is a hot zone for crude oil, right? So we know what they are as long as we understand where the impact is going to fall. So that being said, I don't know if it's going to be quiet, Jim, because ultimately what we're going to find is that the market participants, right? Overall market participants, investors, traders, they're going to jockey around for position, trying to figure out how they want to be pre-positioned in front of the FOMC. I have a hard time being super bearish across the board because there are going to be places as money is flowing out, there's going to be money flowing in. That's the way markets behave. Money doesn't go under the mattress because then we can just get long under the mattress futures. How come those don't exist? Where is the under the mattress ETF? Maybe we need to make that here at Simpler. All right. So with this being said, Tim, you like The Universe Always Has a Plan? It is a quick little read, and I do like quick little reads sometimes. I thought it was good. I thought it was really, really good. So as always, gang, I kind of ran over, so my apologies. As always, thanks for joining me for Charts and Coffee, my caffeinate and dominate crew. I appreciate you. I love the interaction we have here. Just smash that like button, if you will, on the way out. Let me know that we're heading in the right direction with the content. It's what you need. Leave a comment if you have ideas for what you'd like me to cover. Feel free to leave that in the comments here. So I'll see you all tomorrow, same time, same station. Be good to each other. Keep an eye on that calendar. Keep an eye on that earnings calendar as well. I'll talk with you soon.